Hey everybody, Dan Fitzpatrick here, stockmarketmentor.com. And I want to look at ARK. If you'll notice the date here, we're clear back into 2020. I could go further if I wanted to, but I don't want to. So here's the thing. This is ARK relative to the S&P 500. All right, they all start at the same. They all start at the same place. So you can see in 2019. ARK wasn't doing that well relative to the S&P until it really started to take off here. But this is the point of this video. You can tell when a really, really hot stock, or in this case an ETF, you can tell when it's time to hop off that train by just looking at how this performs relative to and you could have it here. Let's make it the QQQ. Nah, screw it. I'm going to leave it the SPY. I'm not calling any audibles here. So right, as we look here, and you know what ARK did last year. It was an absolute monster move. It's like that was an amazing move, and a lot of people made a lot of money. I sadly was not one of them. But still, so we see this thing going, and watch how it just continues to outperform. Now, the S&P is doing well, but ARK is just absolutely crushing it, barely tagging the 10-day moving average even. And so here we are in still going, okay, trend break there, but still going. Meanwhile, the S&P is kind of drifting around. Now, you'll notice the S&P has been trading sideways. ARK is still essentially moving higher, but not at the speed that it once was. So, you're looking here, and you see here we have a channel. And so this keeps going up. Now we're into close to 2021, and this is just absolutely bubble vision here, just absolutely popping, not popping, but it's moving. Okay, new highs, and the S&P is just kind of floundering around. And then now we're into 2021, and just watch what happens. So now the S&P continues up in a relatively undramatic way, while ARK has really fallen badly. And then it just continues to fall, and so here we are. Okay, so my point for raising this issue is actually pretty simple. It's really important to know if the stocks that you're in are outperforming the market. It's not going to be an everyday thing, not at all. But you want to have markets, you want to have stocks and positions that have a high relative strength, because if they're underperforming, the S&P or the NASDAQ or whatever benchmark you want, if they're underperforming, then you would actually be better off having your money in the S&P 500 or in the NASDAQ 100 rather than the stock that it's in that's not doing as well. And by the way, think about it this way too. If the NASDAQ or the S&P are outperforming the stock that you're in, but the NASDAQ and the S&P are moving lower, you're not making any money that way, then you have to flip around your logic and say, well, wait a minute, okay, so I'm in the position that's losing me the least amount of money. If I was in this other stock, whether it's ARK or any other stock, if I was in that stock, I would be losing a lot of money. Well, so I'm only in the S&P now or the NASDAQ, and so I'm losing less money. Hey, that's a good trade. No, it's not. If you're in that situation, then you just say, maybe I'll just be in cash. So if you run through that simple analysis, that simple thought process, you will find yourself out of stocks that later you would otherwise look back at and say, why did I hold that stock? I held it too long. What was I thinking? I lost my focus, etc., etc. So just look and see, make sure all your stocks are outperforming the S&P or whatever benchmark you have. And if you can say that about all your stocks, you're literally going to have no way to fail. You just won't. You'll succeed by default, okay? Almost by accident. So anyway, that's all I got for you. Members, I have a longer one today on a lot of different things, so I hope this works for you.